Welcome to the OANDA Market Pulse charting analysis video. My name's Craig Erlam, Senior Market Analyst at OANDA. Now, before we begin today, I just wanted to touch on a few of the key points from the Fed decision and press conference last night. Now, I think the important point to take away from this was the fact that, well, of course, the Fed raised interest rates. That's the most important thing. It's begun its tightening cycle. But the other point is that we did get that dovishness from Janet Yellen, which enabled the markets to continue to push on today. Now, I'm going to show you some charts in a second which show you this, but really the important point was she got the message across very well. Now, we've of course seen a number of scenarios this year where central banks have suggested one thing and delivered another way, the most obvious being the SNB in January, but then also the ECB earlier this month promised a lot and delivered very little. But Janet Yellen both delivered the rate hike, which she had suggested was going to come, but then also delivered that very dovish message, reassuring the markets that while future rate hikes are going to come, they are going to be very gradual. We are going to see very gradual rate hikes, which means that we shouldn't see the kind of shocks to the markets, but also we shouldn't see the shocks to the economy as well. So the economy's not going to, isn't going to all of a sudden come to a standstill just because the Fed has begun the rate tightening cycle. Now, what I think displays the reaction in the markets very well is the reaction well throughout the markets. We can see that the equity markets here on the left hand side are in the green today. Not only are they in the green, we can see that they are staging strong moves today. We're seeing 3.5% in the DAX, 2.5% in the CAC, 1.5% in the FTSE. We saw strong gains overnight in Asia. We saw strong gains in the US session as well. But what I'm very impressed by with the markets is the resilience to this rate hike, not just in equity markets, but also in things like if you look at the emerging market currencies here. We are only seeing minor losses for the Brazilian real, for the Russian ruble. Of course, this is the dollar versus the ruble, so this is the dollar is up 0.25%. It's up only 0.76% against the Brazilian real, the Chinese yuan. Only seeing very small losses in these emerging market currencies against the US dollar, and given the fact that these were expected to potentially see the biggest shocks, then that is a positive point. And again, the US dollar is only up 1.04% on the day, and again, this really reflects how well positioned the market was ahead of this announcement and how good the communication was from the Federal Reserve, and then how the reassuring message has come across in the market, so there's been no shock here. So I think these are some important points to highlight. But now I want to move on to some charts which we have lined up for you today. The first thing I want to touch on is euro dollar. Now, we did see some dollar strength off the back of this, of course. I think this is something we touched on yesterday. It was quite expected that we were going to see some form of dollar strength, but what I wanted to highlight yesterday, and what I wanted to stress yesterday, is that we were unlikely to see substantial dollar strength just because it was so priced into the markets. And this is what we see here. We're back at around 108.25 to 108.30. I think 108 is going to be very key now. Now, I think we have seen the move almost completed from that rising wedge, which I've highlighted. I suggested that given the size of the opening, the 200 pip opening, once we saw a break below the wedge at around this 110 level, then you expect then quite often you'll see a move projected lower, the same size as the opening. So a 200 pip opening, you'd expect a 200 pip move projected lower from the breakout, which would take us back to around this 108 level. And I think this is going to be a key level of support for the pair. And if we see a break below here, then this may suggest that we're going to see a slightly bigger move, potentially back maybe towards these 107.50 levels, even as low as 107. I wouldn't expect at this moment to see a move back towards these 105 levels, just because this move here priced in firstly a Fed rate hike, which we've got, and they've matched expectations perfectly, but it's also priced in substantial ECB easing, which we didn't get. So I wouldn't expect to see a move back towards here, but we could see a move back towards these 107.50 to 107 levels in the medium term. If in the short term, if we see this 108 broken, which I'm not necessarily convinced at this stage will actually happen. The next chart I wanted to highlight was cable, because we are trading back towards these 149 levels. Now, we could see this 149 broken, maybe a move back towards these 148.50, but I do think the move in cable is going to be fairly gradual, because one of the things which came from following this Fed decision is, I guess, a rising expectation, not necessarily being reflected yet in the markets, but a rising expectation that if, given how smoothly this has gone, this may be encouraging for the Bank of England. And I think a lot more people are talking about the Bank of England raising interest rates in the middle of next year now, rather than the end of next year. And I think we could start to see this reflected in the markets in the coming weeks or months, especially if we hear more from Mark Carney, who may offer that more more hawkish message. But in the meantime, this 149 level I think is going to be key, and beyond that 148.50 just below here could offer some support again. Dollar yen, we did see it pushing higher again based on this dollar strength. We saw 122.20 broken. This was a prior level of support, turned resistance. It had been a notable level on a few other occasions as well, but we have seen that broken now. So I think this 123.50, 123.60 level is going to be key again, a prior level of resistance. We could see this continue to grind higher from here, but I think in the short to medium term, I think this 123.60 level could be key. We could find ourselves back in this trading range that the pair found itself in throughout November and at the start of December. The final one I wanted to touch on here is WTI, because we did see WTI pull off. Now I think there's going to be a few reasons why that have contributed to this. The first reason, of course, is that dollar strength tends to weigh on commodities, and that's something we could see as well on the charts I showed you from the Reuters terminal. Commodities did take a little bit of a hit off the back of this rate decision. Also, we had these EIA crude inventories, which showed a higher build than we were expecting, which again tends to be bearish for oil. We've also had comments from OPEC in the last 24 hours, and they suggested that they expect oil to remain at these lower levels well into next year, especially once Iran returns to the market, which could come as early as January. And with this, we could see an extra 2.5 million barrels of oil produced on top of the 30 million barrels a day that we're already seeing from OPEC. So again, this weighs further. I think this contributed to the sell-off yesterday in oil. And finally, the discussions in the US with surrounding exporting US oil, which doesn't currently occur. Again, I think this has helped weigh on oil prices as well. But still, we are still trading above these lows from earlier this week. I think 34.25 could be key. But to be honest, given the reaction that we've seen at this previous level of support, turned resistance, and given the trend, I do think these 33.70 and 32.20 levels could be tested in the coming days and weeks. For more in-depth news and analysis, check out OANDA Market Pulse at MarketPulse.com. You can also find out more about OANDA and sign up for a free demo account at OANDA.com. Here you'll also get access to OANDA Forex Labs, which has a lot of great tools designed to help you in your trading.